Good morning, everyone. This is Financial Literacy 101, and today we will be reviewing Dropbox. Now, a lot of you, I thought Dropbox was associated with Microsoft. I think they have some sort of contract, but today we're going to get into their stock because going through their timeline, going through their chart, I feel like it's some sort of acronym that they're ready to do great things in this cloud space because quite frankly, them and Google Drive, Dropbox and Google Drive were one of the first ones that really came on the map offering cloud storage. So we're going to go over and we're going to find out some information about Dropbox, okay? We're going to do it on the regular website. We're going to do it on Robinhood as well, okay? So Dropbox is a file hosting service operated by the American company Dropbox, headquartered in San Francisco, California, that offers cloud storage, file synchronization, personal cloud, and client software. So let's get into their line chart here so we can see how they're performing. But don't forget, just because their performance may look bad or may look good, doesn't mean that it may be a good investment. But nonetheless, Dropbox is less than 5 years old. As you see at the top right, there's a 69% buy from the analyst. We'll get into that as well. The 5-year line chart has it losing about 31%, okay, about 31% the last year. Now they're up 12.5%. 3 months, they're down 10%. 1 month, they're down 5%. 1 week, they're down 1.4%. And then today, they were up a little bit, and now again, they're failing. Now, the question that once again that you've always asked, is this a good stock for you to invest in? We'll get to it. Let's learn a little bit more about Dropbox, okay? Is listed on the common stock. It is a collaboration platform that's transforming the way people and teams work together. It offers following products: Dropbox Basic Plus, Professional and Business. Dropbox Basic is a simple, powerful home for photos, videos, documents, and other files. If users also get access to new product Dropbox Paper, a collaborative workplace that helps teams create and share early ideas and work with any type of content in one centralized place, okay? It's kind of like a virtual workplace, so to speak. They just don't do cloud storage. They have like a virtual workplace where you guys are sharing and swapping out files. I'm going to read that again because I think that's really important because that is the wave of the future, especially COVID-19 has pushed the future. The Dropbox Basic is a simple, powerful home for photos, videos, and documents and other files. I'm surprised Dropbox does not have a virtual video meeting platform, something like Zoom or either, what's the one by Microsoft? Google Meet. There's a new Microsoft one out. And then, of course, the one by Cisco Systems. I forgot that one. WebEx. It's a collaborative workspace that helps teams create and share early ideas and work with any type of content in one centralized place. The Dropbox Plus provides unrivaled sync along with 1 terabyte of space, powerful sharing features, and increased control. The Dropbox Professional allows independent workers to store, share, and track their work from one place. The Dropbox Business is designed for small to enterprise level businesses, which users get full visibility and control over how critical work files are accessed and shared, while letting team members continue to use their products. Now, they were founded by Andrew W. Houston and Arash Veloso in June 2007, and of course, the headquarters in San Francisco. Nothing significant here. We have 2,100 employees, but let's get on this price earning ratio. You always hear me talk about PE ratios, and I really need to let you guys really full intake and understand PE ratios before I go any further, because their PE ratio is $376. Okay, $376. So I set up some notes for you guys. I really want not that. That's the stuff I'm buying from Amazon. But let me break down some things for you guys. Okay, let me break down some things for you guys. Let's learn a little bit about PE ratios. I won't go into a long, drawn out class, but there's some information I need for you to understand. Let me blow this up so you can see this just a little bit better. Here we go. What's a good PE ratio? A higher PE ratio shows the investors are willing to pay a higher share price today, because of growth expectations in the future, okay? In the future. So if you're a day trader, this is probably not appealing to you because you're worried about today. You're worried about today, not the future. The average PE for the S&P 500 has historically ranged from 13 to 15. For example, a company with a current PE ratio of 25 above the S&P average trades at 25 times the earnings, okay? 25 times the earning. So that's really, really good. So let's break it down even more so. What does a PE ratio of 15 mean? For example, a ratio of 15 means that investors are willing to pay $15 for every dollar of a company's earnings. Okay, $15 for every $1 of a company's earnings. Very important, very important. This is why the PE ratio is sometimes referred to as the earnings multiple or just multiple. Okay, so for every dollar that a company earns, okay, not a company earns out of debt essentially, okay, not in debt. But this space is where we talk about evaluations, undervalue, because some people look at PE ratios, whatever they earn, I'm willing to pay that $15. Okay, the $15 is for an example. Some people say every dollar outside of debt, I'm willing to pay the $15, for example. So let's go a little deeper. So let's use Amazon, so to speak. Let's use Amazon. Let's go find out information about Amazon. So Amazon stock is at 3,305. No, let's go right down to their information here. They have a price earning ratio of 126. Okay, 126. So that means for earnings, okay, people are willing to pay $126 for every $1 of earnings, okay? But to go a little bit deeper, I think that we need to know, instead of like, okay, right now, let's do 126 times 1,300. Let's think about large numbers, big numbers, where this company has done or is going to do in this third quarter of theirs. So I'm gonna go over and say Amazon expects revenue to be between 87 billion, okay, 87 billion and 93 billion in the third quarter, and learn from its previous guidance to expect profits forecasting operating income of 2 billion to 5 billion, even as it accounts for 2 billion in costs related COVID-19. So what do we do here? I need to up the ante on my numbers here, because I had 87 million. So we're talking about 87 billion. That's a lot of numbers, ladies and gentlemen. Let me tell you, this roughly evaluates this company. As far as for the third quarter earnings, over $100 million something dollars. Oh, well over $100 million something dollars. So let's just do this. So we have, let's see, 87. I think I probably can see 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, I'm missing. I got too many zeros up here. Let's clear this out. There we go. Times the 126 of their PE. What number are we looking at, guys? Anybody know what that one? Is that 1 trillion? Is that 1 trillion for the third quarter of your earnings? Let's do this. In case you guys don't understand numbers, because when they start putting that E, that means for everlasting. But let's put this in Google and see what it really computes out to. You don't need to know, you don't need to break down all this complicated math, but you can simply bring it to Google and look what it does. it breaks it down for you. Okay, it breaks it down for you. Or you can simply do something like this, and it will tell you. So their quarterly earnings for that particular period is astronomical. It's astronomical. But this breaks down what a PE ratio really shows you for you to understand what I'm about to show you for Dropbox, because it's imperative if you're going to think this is a good stock or not for you to invest in. So basically, for every dollar that they earn, investors are willing to spend $376 for every dollar of earnings. Now, what's holding Dropbox back? As you can tell from their line chart, from 5 years, 1 year, 3 months, it's sort of an anachronism that they are in a weird space, and there's really no consistency. It's really inconsistent. So let's go over to Market Watch and let's break this down even further. Okay, further. Let's see their details and analytics right here. Okay. So they opened up at $20. The 52 range is roughly $10. Okay, so 14.5 to $24. 14.5 to $24 in the last 52 range. So if you would have bought these shares at $14.5, for every share you would have gained $10 in earnings. You would have gained $10 in earnings, which is more than 100% of your return. Okay, so look at this. Dropbox is a company that is actually operating in the money. They're actually operating outside of debt. They're not in debt. Now, they have a really small EPS. Okay, earnings per share, EPS. That is a great indicator what a company can pay their shareholders, but no company that I know of, unless it's Ford, that really pays their company while they're in debt. Or most companies that pay dividends, they really don't see their stock growing that much. More stocks really like, we're a really solid company. We do have a little bit of growth potential, but you're not going to see us go 80 to 100% in growth in 1 quarter. You won't see that. You see a lot of that with a lot of new stocks or stocks who are really pushing the envelope, like Tesla, like Microsoft, even though they're very old, but they still pushing the envelope and they're doing more innovation. They're coming out with new products. So again, the biggest thing, again, that Ford would do, for example, is come out with an electric vehicle, which I think their stock may even jump up. They're roughly around $6, so their stock may jump up to around $10 to $12. But don't quote me, because the market is a fickle beast, very emotional, okay? Because who controls the market? Big time investors, people who buy large volumes of stocks. And I don't mean your 100, 200, 300. I'm talking about your Warren Buffetts who going like, I'm gonna buy a million shares of IBM. Let's move on. All right, here's some information. Dropbox boasted solid results, but its CFO departure is worrisome. So basically, this happened August 7th. They're talking about their CFO, their chief financial officer leaving. Okay, that is really detrimental to a company, especially when you talk about investments. When you're talking about the CEO, the CFO, now you're talking about their press secretary, because every company has some equivalent to what the government has, a press secretary who speaks on their behalf. That's not a big thing. But when you're talking about the CFO, the chief financial officer, this is the one who really holds the pendulum. We either go this way or that way based upon the decision that the CEO makes. That is very worrisome. But there may be value still in this company. There may be value still in this company. So this is something really to look out for. We're looking for a company. Now, analysts have it at 69%. They have 15%, 12%. It doesn't really meet my criteria of 25% of the analysts say sell. So I think this could be a stock that some of you may be interested in investing in, because again, this stock is about the future. It's not about the present. Okay, what are the collections? You have it in technology, data services, software services, and then of course 2018 IPO, and then US and North America. Now, hear what the bulls are saying from Morningstar. Dropbox large user base, even including free users, that's me, may attract application developers and service providers, in turn making the platform indispensable for knowledge user. Dropbox platform neutrality and application integrations may allow it to become compatible with even more software providers. Dropbox is just beginning to scratch the surface of rising APRU trends and strong paid user growth, which both have a long runway for growth. Now, here are what the bears are saying. Okay, so we understand bulls versus bears. Bulls always look for a bullish market, willing to do well, that, you know, the S&P and 500, the NASDAQ, New York Stock Exchange, the Dow, all those things are going up, up, up. Bears are always looking for things to go down. So they're looking at this stock like, these are the reasons that this stock may go down. Just for you, a little bit more information. Dropbox scant enterprise customers, generally thought to be stickier patrons, may lead to higher churn and lower CLV. Dropbox subpar paid user conversion may indicate that cloud storage is commoditized and that futures like paper and Showcase may lack meaningful differentiation. I messed that word totally up. Microsoft and Google, leaders in Office productivity software, also offer storage and collaboration platforms that may provide to be worthy rivals to Dropbox. Now, let's take a moment out for that one particular thing. Now, I don't know about the Microsoft video platform that they just released. I know about Google Meet, and I also know about the Google storage. I love my Google storage, my Google Drive. But the one thing they're missing out is, I read this back in the description here, that once we go back here, it says that it allows products, paper, a collaborative workspace that help teams create and share early ideas and work with any type of content in one centralized place. Literally a virtual workplace. Now, granted, Google Drive, the information I know about that, you can share things, but this is more innovative in the sense that it's creating a virtual office that you are actually trading stuff live versus sending and sharing, okay? So that's a huge difference. And I think that Dropbox, in order to stay relevant in this particular market, has to keep pushing the envelope with their whole virtual office, especially as COVID-19 has pushed everything virtual and video. Okay, their quarterly earnings, they have been doing fairly well. Even though you see them in the red, they've been doing well. All the way from, wow, look at this, Q4 of 2018, they have consistently going up. Q1 2019, they look like they was on a steady path, so they moved sideways. We understand that the market goes up. We understand that a stock can go up, a stock can go down, and a stock can go sideways, meaning that it really hasn't changed. So in this particular situation, these earnings from Q4 2018 to Q1 2019 has not changed. Q2 went up. Q3 2019 went up. Q4 2019 went up. Q1 2020, slightly an increase in profit and revenue. Q2 2020 went up. So does this look like a good stock to buy? Does this look like a good stock to buy? In my opinion, ladies and gentlemen, I believe that this is a really good stock to buy at this current moment. I really do. I really do think that this is a good stock to buy in this current moment because they're showing growth. They're showing that they have the consistency to grow each and every quarter. So those are really, really good profit margins that I think everybody want to get into it. Now, granted, did anyone see the share price for Dropbox today? Did I go over that really quickly? Let me show you this really quickly. Let me show you. Right now, they're at $20, okay? Right now, they're at $20. And if we look at the 5-year mark at their peak in June 15, 2018, they were up $40. They were up $40. So even if Dropbox goes up to $30, you right now will be a winner in this stock. You right now will be a profitable investor in this stock right now. Okay, what else is important to know? So I've been hearing a lot of information about some of the videos that are scouring the internet, especially on YouTube, about the Democratic. Now, this is your bonus information. It has nothing to do with Dropbox. This is your bonus information, but I'm going to tie this all in. So this may just be good information for you to go along because if you notice, lately I've been doing a lot of political economic videos when it comes to money, which I absolutely love because it's very interesting. So people who don't see this video, they're not going to even get this information. They're simply going to think it's a stock review for Dropbox. But I'm going to drop some bombs here. Because we've been hearing a lot of information on the internet about the Democratic Party and Republican Party and what Obama has done essentially for foundational Black Americans versus what Trump has done. And my disclaimer, my disclosure with this particular matter is I am not a Republican. I am not a Democrat. I'm not a liberal. I'm not a conservative. I'm not an independent. I don't affiliate to any political party. What I like to do, I like to give you the financial facts, So let's break this down, what I'm talking about. Like, what is he talking about? Have no idea what this guy is ranting about. So let's find out what I am actually talking about. Okay, guys? Let's find out about this information. Did I close all my web pages down? So I have a list of information for you guys, and I want to break it down so you guys totally understand what I'm getting at, okay? So let's look at this. Let's look at this in this totality. So I heard this video about how Obama gave money to Black farmers, how Obama gave the most to HBCUs, how Obama did all these things for Black people. And foundational Black Americans who are in the know, some people are subscribing to this new term called B1, Black First. I subscribe to that, Black First. I subscribe to that notion, and that we need to really push the envelope on political parties to do something for Black people, because we need to understand when our friends who are non-Black, and our friends who are Black, okay, Black Americans who are friends who are Black, who are not in the knowing, they're not in the knowing about facts because essentially they were reluctant to do their own research, go out and search websites and get like that unadulterated information rather than looking at the news and letting them be fed by imagery. Because we understand, when I look at the news, when I look at TV all day, I'm being fed imagery and it's been influenced on the way I think. But we need to read, we need to dig, we need to research in order to be informed. Okay, so here we go. Obama pledges $33 billion to African commitments. Oh, and the other person, this is the story. The other person also said that Obama gave $50 billion to Africans. Now, I can get into a whole tirade and rant about why give money to Africa and that economy and not helping out foundational Black Americans. But we need to understand that, again, a lot of this, when it comes to our government, is about business. It's about money. And that's what we need to truly understand. So don't just think Obama gave $50 billion or $33 billion to Africa. No, mon chéri. He didn't do that. We're talking about business. Seeking to strengthen America's financial foothold in Africa. I'm going to back up a little bit. Seeking to strengthen America's financial foothold in Africa, President Barack Obama announced $33 billion in commitments Tuesday aimed at shifting U.S. ties with Africa beyond the humanitarian aid and toward more equal economic partnerships. Again, beyond humanitarian aid, not just giving money, and toward more equal economic partnerships. The bulk of the commitments came from the private sector companies, including Coca-Cola, General Electric, underscoring Africa's growing appeal to businesses. The continent is home to 6 of the world's fastest growing economies and a rapid expanding middle class with increased spending power. Yet Obama noted that the U.S. trade with the entire African continent is about the same as its trade ties with Brazil. We understand that Brazil has the largest Black population outside of Africa. We're the second. But Brazil has the largest African population outside of Africa, and we're the second. Just a note here. Ties with Brazil, and just about 1% of the U.S. exports go to the sub-Saharan Africa. We got to do better, much better, he said during closing remarks at a day-long session that brought together U.S. and African politicians and business leaders. I want Africans buying more American products. Listen to this. Again, he did not give money to Africa. This said beyond humanitarian aid and economic equal opportunity. But listen what he said. He didn't say, I want America to buy more African products. I want America to have strong ties with Africa to buy some of their exports. He didn't say that. He said, I want Africans from Africa. I want Africans from Africa buying more American products, and I want Americans buying more African products. So that partnership, he wants us to be buying things for them and things buying from us. But let's get it straight. Let's get this track record straight. He didn't give that much money to Africa. Let's just be real. He wants better economic partnerships. Hold up. Kale tonic break. That is delicious. Let's move along. Let's move along because I got more information for you guys. This is the one that everybody wants to know here. Woo, woo. Obama versus Trump. Obama versus Trump. Who did more for HBCUs through their first 2 years? Through their first 2 years. Okay, so I want to make sure that people understand this is the first 2 years. So people are like, in 2000. No, the first 2 years. We got some Russian guy in here, Master Rubik's, and we have Mitchell Liggins. Good morning, gentlemen. The Russian guy, I don't read your language. My apologies. I am not versed in that particular vernacular. Anyway, so I want to break it down because I know this is going to really smack a few people in the forehead, okay? This is going to like, okay, I didn't know that. And again, I am not affiliated with any political party, okay? I'm just giving you the financial facts, okay? I can scroll through this and tell you what's red states and what's blue states, but I'm just going to give you the numbers. I'm going to give you the numbers. So now this website is the HBCU Digest. And so this is scroll down so you see who supports this channel. We got black faces, okay? We got black faces, just so you know. Now, let's go back up and get the information that you guys want and desire. Okay, here we go. So what are the real numbers on HBCU federal funding? Let's break it down. Strengthening HBCUs parts B and F, Obama, $673 million to Trump, $682 million. Strengthening HBCU graduate institutions, $123 million to Trump, $136 million. Strengthening HBCU's master's program, Obama $23 million, Trump $16 million. Funding for Howard University, $469 million, Obama, $454 million, Trump. HBCU capital financing programming, $139 million. Of course, I'm rounding up. $139 million, Obama, $291 million, Trump. What are the totals? Obama gave $1.43 billion. Trump gave $1.58 billion. That's almost like what, 13 to 15 million more? So let's read it. It says context matters here. Inflation. Funding on the heels of economic downturn, the composition of Congress and budget priorities for job creation and healthcare are elements critical for an analysis of either president's HBCU support. And even though we may not be able to fully trust numbers, this is very important, even though we may not be able to fully trust numbers compiled by officials working under partisan directives, meaning that they subscribe to the Democratic Party or they subscribe to the Republican Party, there are few budget outlines of any kind which suggest other than what too many of us fear. The guy we love, listen, the guy we love to hate. The guy we love to hate is showing historic love to historically black colleges. The guy we love to hate. The guy we love to hate is showing historic love to historically black colleges. I'm not done. I got one more for you, maybe two more. Who knows? Now, they was talking about how Obama gave a lot of money specifically to black farmers. And the one question that foundational black Americans need to understand or question is, what has Obama done specifically for black people systematically for black people. And he said, Obama signs measure funding black farmer settlement. Let me tell you, sometimes these news, right, this is from CNN, which we know they support Democrats. But what they do is they give you a headline and you run with it. They know most Americans, they're not going to read the information. You guys just going to run with the information. Like, my Obama gave money to the black farmers. My Obama gave money to the black farmers. And guess what, ladies and gentlemen? As a man, as a guy, Obama seems like a real cool dude. And I think that I would like chilling with Obama. But as president, again, let's find out what he did. Because again, I'm not partisan to any political party. Let's see here. Obama on Wednesday signed a $1.15 billion measure to fund a settlement initially reached between the Agriculture Department and minority farmers. More than a decade ago. Holla at your boy. Minority farmers. Wait a minute. Obama signs measure funding black farmers settlement. So let's be really intelligent about this. Is every minority in America black? No. You have Indian Americans. You have Korean Americans. You have Chinese Americans. You have Hispanic Americans that are minorities because they're not the majority. We understand that the majority of America are European immigrants that stole this country. Uh-oh. The majority of Americans are European immigrants that stole this country from the Native Americans. Now, we can get into how the Moors actually traveled the world and they actually landed on this land first, but that's going to be a lot of controversy. And I'm not trying to start an argument. I'm just trying to give you facts. I'm going to read it again so you guys understand what I'm getting at. Obama signs measure funding black farmers settlement. And then in the very first paragraph, that's the only thing you had to read. He signs a $1.15 billion measure to fund a settlement initially reached between the Agriculture Department and minority farmers more than a decade ago. And the key word is minority farmers. Minority farmers. Let's read a little bit about it. The legislation signed by Obama also funds a separate, so that 1.15 billion, okay? A separate now this is not part of the 1.15 billion, excuse me, but he signed a separate fund. And as I keep telling you guys, whatever the government get Native Americans, they deserve it, okay? They deserve it, okay? They gave them reservations, which is probably not the best land that anyone could be given, but they continue to get their reparations today. And foundational black Americans, we get jack and nothing. Okay, we get jack and nothing. The legislation signed by Obama also funds a separate $3.4 billion settlement reached with the Department of Interior for mishandling Native American trust funds, along with 4 separate water rights lawsuits by Native American tribes. Hold up. Who gave the Native American trust funds? Okay, you know what I'm getting at, the government. 3.4 billion settlement, 3.4 billion settlement, 3.4 billion in reparations. They get reparations on top of reparations and top of reparations. And I'm not hating on their come up. But it's hard. It's hard to look at a situation and look at somebody getting what belongs to them, and you over here looking stupid, broke, and dumb, and like, you get what I'm getting at, right? So one more, and I'm gonna get out of here for today. I'm sorry if I'm giving information, and I'm sorry that I'm riling people up, but this is the information. I'm tired of naysayers. I'm tired of haters. I'm tired of people getting on certain platforms ranting and raving about what Obama did and the Democratic Party did. Do your freaking research. Open your freaking eyes. Stop being dumb. Stop being brainwashed. Stop just looking at the news and read the news. They give more information in you reading than they ever would while you watching. But because you're lazy, you don't want to read. You just want to watch. This is another story telling you that Trump has given more money to HBCUs. That's all it is. Talks about Beyonce giving money. And if you guys want to fact check this yourself, this is coming from WUSA9.com. And it says right here. It says right here, because this is going to be the one that really blows your hair back. Okay, this is going to be the one that blows your hair back. So if you over there buck dancing, okay, if you're over there busting it up for Zaddy, as Tariq Nasheed would say, if you got some of that wob, not that wop, you got some of that wob. You know that wop is that wet ass punani. But if you got that wob because you buck dancing for Zaddy, you got that wet ass bussy, okay? You got that wet ass bussy. You tooting it up for Zaddy because you don't want to do a research. You just want to get whatever the Democrats give you, and they giving us nothing. They is giving us nothing. We went straight to the Department of Education. And according to their records, Trump gave the most to historically black institution for both undergrad and graduate studies. Obama held the record back in 2010, but in 2018, Trump appropriated more than $360 million, which is $32 million more than Obama. So we can verify Trump has spent more than any other president on HBCUs. Let me tell you something just for you guys to understand this, because I know you know. Trump said some very idiotic, dumb, stupid, racist, racism, discriminatory things. And I don't support him as president. But we supported Obama because we thought he was going to do something. And so while they tell us one thing that he did for Black America, what they didn't tell you on the other hand, he did it for everybody else too. He did it for everybody else too. So again, let's understand this. If you're a foundational Black America, meaning that you're not an immigrant, that means that you lived here, that you're a descendant of greatness, aka descendant of slave, but you're a descendant of greatness, okay? And your ancestors died coming over here. That's what we need to understand. That when we talking about reparations, when we talking about Black economic empowerment, we're talking about something specifically for us, something specifically for us and not for everybody. So the next time somebody challenged you and they say, well, he did this, this, and this, the one question that you should have for them is, did he do it for anybody else? And 99.9% of the times, you're going to come up with the answer, yes. This is Financial Literacy 101. Learn money and be inspired. We talked about Dropbox, but we talked about a lot more than that. I'm out.